Hey, what's up, everybody? All right, so this is Chef again, and I just want to share a couple of things here, and let's see. Let me just erase some stuff here. So I posted on Instagram a couple of days ago to see if anybody had any questions, see if anybody needed anything for me to help or anything in general. And one of the questions was, hey, like, what is something that you would have, you know, taught yourself if you had barely just started trading. Okay. So what would you teach yourself first, right? So with what knowledge have you accumulated with over the experience that I have now in order to start a new trading journey? It's actually a really good question because I think a lot of traders, um, get lost in wanting to learn everything and anything, and they feel like you got to follow a specific trader in order to be profitable. But in general, I think trading is learning the basics and learning what price action really is without indicators. I spent my time learning a bunch of indicators and I didn't do well. And the thing about it is that the stock market has so many things. Like if you look to the side right here on this watch list, it has so many numbers and so many variables that can cause confusion, can cause indecision, and cause stress panic attacks because you're in a position and you're like, hey, well, somebody said it was going to go green or whatever, or somebody said, go look at this, or somebody's in this trade or whatever, right? At the end of the day, like what you want to do is make this complicated screen and this complicated journey a very, very simple journey for yourself, right? You want to keep it as simple as possible, even with all these numbers and, lines and strategies and techniques and news articles and upgrades and downgrades and movement on the dollar, the fear in the VIX and the airlines and, the energy sector, staples and, just everything in general is there's just so much going on and it's a day by day. If you wanted to become a day trader, we take it day by day, right? So again, I'm going to go back and to refer to the question that I just had as to like, what is something that I would teach myself, right? Well, I would teach myself the basics as to what charts really are and what they're made of, and how to become a profitable day trader using no indicators whatsoever. As you guys can see my screen here, I'm just scrolling through a couple names here. I really don't have any indicators. I don't have anything, right? So clear everything of your charts, make it stress free, make it simple, and learn why something breaks, why something moves, what is a retest, what is a breakout, what is a dip buy, dot dot dot, right? So right now, what I'm going to talk about is I'm going to talk about this chart target and kind of explain the basics of this, right? Getting to know what support and resistance is, versus supply and demand and versus taking some day trades and swing trades and stuff, right? So this chart right here, as you can see, this is the 4-hour time frame, okay, 180 days. Well, it doesn't matter how much time. What you want to do is take as much data as you can and collect based on this chart, right? So we're here, right? That is the top from the previous 180 days, and then this 125 is basically the low. Do I really care to have a trend line up here, a trend line down here, or whatever, a price line? No, it doesn't really matter because right now we're right here at 136. Okay, we're in these current levels. So understanding the basic principles of this chart, where are we going, where have we been, and where is the potential of the future? We basically been dropping, okay? So it's clear that we've dropped, okay? Naturally, what I would teach myself is, hey, you want to look for risk to reward. The risk to the downside versus the reward to the upside. Okay, I think the risk to the downside doesn't make any more sense, right? The reward basically. The risk is high because you're trying to buy the bottom of something that already dropped, right? So that risk to reward to the downside doesn't make any more sense. What you want to look for now is the opposite. You want to look for something to reverse, right? You want to look for something to go like this, back into like that 160, 165, 170, 75, 80. You get the point, right? So it's all about understanding why the basics are important. Not every stock will recover. Not every stock will continue to drop. And each company is different based on its own value and based on how the economical events are turning out and affecting the stocks in general. Each stock, like I said, has its own value. So you have to do some due diligence on that. So here, what I would tell myself is here's your drop. Okay. The basic is called accumulation. Accumulation in stocks is when something goes sideways like this. You will hear many words. Some people will say sideways, some people will say range, some people will say chop, and others will say accumulation. So what I'm grabbing here is I'm going to grab this candle body right here because this is the previous green candle. And as you can see, every time we hit here, we got rejected, right? So you can see, so from that candle to that wick, you can see that we rejected so many times. So basically what this is doing, it's respecting its trend. What is the current trend? It's down, right? So because it's downward, every time we hit that level, that 135, it got rejected, 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 okay? Every single time. So the price action here, which you would tell somebody who's barely learning, it's bearish. But if you set the alert and we break above that 135, 135.50 level, then this is going to change price action. Now the price action will become bullish. And what is something that you look for? You look for something to break above, come down, and retest to create the staircase pattern. A staircase pattern is called public participation phase. So this is something that I would teach myself when it comes to just your basic knowledge of understanding what accumulation is. What does this mean? What happens next? What to look for? What kind of confirmation? This is exactly what I'm looking for. I'm looking for this nice red candle, and then tomorrow, what I will look for is a nice green one, at least inside here, right? So this is what I look for, like nice 2-4 hour green candles. If this holds into tomorrow and this decides to push up, it's going to tell me tomorrow that it's going to be a bullish trend. And then from there on, I will continue to trade target with a bunch of call positions to the upside because I see the risk to reward is great on the upside and the risk is very minimal, right? So again, it's all about understanding your basic principles of accumulation, of supply and demand, supporting resistance. This is, something major that a lot of traders out there miss on learning because they're so focused on trying to learn like every little thing, and then they go on these smaller time frames, and then they get scared because there's like a huge red candle, or get too excited because there's a huge green candle. But this right here is a perfect example of something so basic, right? So that's, again, using no indicators, using no news articles, just learning what the movements of a candle is, right? Let me check out PayPal now, right? So PayPal, look at the small. Oh, let me take all this stuff off. And let's look at the chart, right? So this is just another example again as to something that broke structure, right? Look at the recent movement, right? So you always want to go back and check what is going on, right? So I'm just grabbing just some random levels here because it's clear, right? Every time we came up here into that like 77.20, almost 78, and as high as like 79, and we rejected every time. And then every time we hit the 71.50, we bounced back up. So it just bounced in between this range, right? It was up and down until it finally broke here, and it broke structure. So this naturally becomes your trend, right? So what happens after something that breaks like this? It's a confidence entry that this is going to continue to go down, as you can see, your staircase pattern, right? Boom. So that's a nice public participation phase all the way to the downside. Now, what is something that you look for? You look for something to start reversing into the upside, right? Now let's get down over here. What is the price action over here? Well, let's look. This here actually created this nice little pattern right here. So this would be considered a bull flag for some. This here can also be a nice support, right? Depending on how you want to look at it. Either way, regardless of how you see it, you want to learn those basic patterns, right? So look at this. Okay, this was resistance right here, and it made a new low right here to 58.95, and then it ran back up. As you can see, it got rejected that same day with that huge red candle, and then the next day it came up green, closed above, and it just started rallying all the way to 65.30. Then you get that drop again, you come down here and you retest that same level from where we broke out from, and where we rejected, and you use that level to enter your trade on the break above, and then it rallied all the way to that 69. So now you guys can see that when we broke from this level, the trend was bearish. And yes, the more you see these green candles, the more aggressive it's going to get to the downside. So that's why there's some big red candles. But somebody out there sees value, and PayPal has started buying down at these levels, and this thing just started rallying, right? So now as you follow it up, the trend technically is your friend now, and you follow it all the way back up. So now you keep this here, right? And every time we rallied up, we dropped back down, right? And we created these patterns right here. Okay, so now you have another pattern, and here we popped up right here. It almost became a double top. It rejected. We respected this trend line now, and that support basically at 65.80 or 65.70, 66. And we just rallied on back up until this target hit this previous demand right here, support, ended up acting as a new support. And then now we're kind of holding right on top, right? So look at this. Here's your little base. Here's your wick. And then now we're just kind of still hanging out up here. So we're in this area again. As you guys can see, I have my alerts here, and I have my alerts up top. Just in case this does come back down, I'll know to short it right below 72 and continue to trade it back down, because I know that the price action in the past will be the same here. So it'll drop it back down, hopefully down into some of these levels down here. I don't want it to drop all the way, because I'm actually in some lead positions that I say that it's going to continue to keep on rallying. But I guess we won't know till earnings come out, right? But those, again, like I said, somebody asked me, what is something that I will teach myself? I will teach myself just the basic principles as to how and why these candles move without having indicators. I think indicators have some great value, but for a new trader, I don't think they are worth it, because it doesn't teach you the why and behind the movement of candles. All it teaches you is a basic strategy on the smaller time frame for you to make some trades, which really defeats the purpose of following the basics of accumulation, distribution, and public participation phases. This way you're learning the actual movement on something, and you're actually able to hold a position a lot longer than just a 1 minute time frame or a 5 minute time frame. You're able to hold a nice swing trade. You're able to buy some shares, to keep on going up and trail. You're able to take many day trades in between on larger time frames and hold as much as you can based on what the pattern is formed and based on the way that it's moving, right? So like Target, look, for example, this thing is dropping today. Like I said, if it doesn't push up tomorrow, I won't look at it for a bullish move anymore. Right here below 135, again, it's going to be bearish, and it's going to act the same as it did in the past. So this will become your supply again, and it's going to be a failed breakout, because this can actually be a double top play right here, right? So that's what makes it a little more difficult, because now you have selling pressure from the double top, but then you have the retest. But like I said, we need a green candle into tomorrow for this to actually continue. Like I said, below 135, I won't be bullish. I'll be bearish below it. But yeah, hopefully this kind of helps you guys see just the basic principle, guys. Like it's a short video today, and I want to get you guys a little more comfortable as to what to look for when it comes to some of these charts, right? Look at this trend right here on /ES. I think a lot of people have been trying to short tops every single time, and which is fine, because if you look at the bigger time frame, there was still a lot of rejection from this, and every time we rallied, we just kept rallying on up and up and up and up. But like I said, this trend right here changed when we broke here. We actually broke here. We came down and retested and just kept on going. These patterns just keep going and going and going. How far can they go? Who knows? You know, it's our job to keep the trend and then keep trading that same trend until proven wrong, right? And therefore enjoy those profits and enjoy the ride back up or back down, whichever one comes, right? So like in this case, right, there's a nice bearish candle right here at 46.34. We're below that 4,600 again because everybody's saying above 46. We never really traded above 46 right now, and makes it very difficult right now for the market. Plus, there's a lot going on with earnings in tech, and just banks, and then oil's gonna have some earnings coming up too. So a lot going on in the market. But let me see if there's another one that I can show you. Oh, check this out, right? So this one had earnings, right? So this is BA. And this one, I'm gonna show you guys why. A lot of people get confused because it has earnings. Sometimes earnings does help you make a decision as to what gamble position you're going to take, right? Check this out, right? This is the weekly time frame. This whole year from the beginning, we've been trading from this 193 all the way into that 220 basically, right? So for a whole year and into earnings, we finally have a good candle right above. So what is something that I'm going to look for into Boeing moving forward? I'm going to look for a lot of call positions as long as this next candle gets red and then green, all the way to the upside until the end of the year. Like, this is what I'm going to be looking for, okay, as a day trader. But look at the trend, like I said, is your friend. And this here is the breakout of something huge. That's an amazing candle right here. So it just shows that the value of BA is pretty amazing, and it probably still has a lot of upside potential. Look at this. So I'm not saying that it's going to do that this year, okay? So don't go ahead and buy December calls. Who knows? We may be back down at 220 by the end of the year. Like, I really don't know. But my goal is to trade this to the upside, right? Look at the way that this turned out actually for earnings. Unfortunately, I didn't trade the earnings. It doesn't matter. But either way, I was able to trade some the previous day into today, and that kind of played out perfectly, right? Let's see if I find another pattern here. I'll go on a smaller time frame, go on the 15-minute time frame. So look at this. Also, knowing your candles gives you better judgment as well. So as you can see right here, it's very, very clear that we had a nice doji, okay? And we're right at the resistance level. Look at this, resistance. A lot of sellers kept jumping in at this specific price point, and they did it just that, and then this sell-off happened. So you could have made tons of money based on that doji alone, and then your stop loss would have been right here, and technically the stop loss would have never hit. So you would have been in a put position for 15, 30 minutes. And then as soon as you went green, you would have probably taken profits. You could have trailed it. And then trail stop would have actually never hit. So you could have just rolled this all the way down. But again, it's the risk to reward, guys. Like, I'm not going to tell my team to buy calls right here because it doesn't make sense to me. I would rather be on the short side at this point, just simply because we've been trending up very aggressively, and it's been fun. So there's a time and place for everything. There is risk to reward management, and understanding the basic principles of supply and demand, support and resistance, pattern trades, and so on and so forth. So yes, something that I would teach myself, something that I would teach many out there, is learn your basic principles, take off all the noise, don't listen to anything. Don't be surprised if the news article comes out and it's negative, but the stock reacts positive, and take it day by day. But learn the basic principles of what candle movement is. Okay, patterns, breakouts, retest, and dip buys. That's what you should be learning. Okay, but anyways, hopefully you guys are all green. Hopefully some of you guys did take that target trade that I posted on Instagram. I said buy calls. I've been in calls since Monday and Tuesday and Wednesday. Today's Thursday. So hopefully tomorrow we end up taking another trade over 136 or 137 and continue all the way up back into the target of like 140. 139, 140, 141. So I guess I'll just keep alerts on this bad boy and see how it plays out. But anyways, you guys have a green week. Enjoy your weekend. If you guys need anything, please let me know. Ask me whatever you guys want. I am more than welcome to answer any question you guys have through direct messages or just Instagram in general. You guys know my handle, chef__zones. If not, just hit me up on Conservative Collectors. All right. Y'all have a good one, and I'll see you on the next one.